Uncertainty over the US Fed's next move, even as NDA nears an electoral win in Bihar, keeps stocks skittish. Consumer durables and utilities notch some gains, while IT and realty drag.
Muthoot Finance posts a strong Q2 FY26 growth with improving asset quality leading to a jump in profits on a gold price surge. The lender ups its guidance for the year and also points to a pickup in micro lending. The stock leaps.
Pizzas seem to be in high demand as Jubilant FoodWorks outperforms its QSR peers with robust same-store sales growth in the second quarter. The QSR major adds 81 Domino's stores in the quarter, even as its Popeyes franchise gathers pace. The stock fires up.
SEBI has floated a consultation paper proposing allowing pledges on locked-in shares to provide those other than promoters more flexibility. It also proposes issuers release a summary besides the voluminous offer document for retail investors.
The results of counting show the National Democratic Alliance clearly in the lead in Bihar polls, and a win is expected to see Chief Minister Nitish Kumar counting to hold the reins of the state.
Good afternoon. You're watching us here on CNBC-TV18, Motilal Oswal studio. This is Halftime Report, and we come to you from, the election headquarters, where the story of the day so far has been the Bihar verdict. As expected from the exit polls, and in fact, outperforming those exit polls as well, it has been a clean sweep for RJD and BJP's NDA in Bihar. And that's exactly what, the street is factoring in as well. From lows of 25,300, the Nifty had seen a rally all the way up to 26,000. And today, as the verdict gets out of the way, because of global weakness, we are seeing some bit of profit taking from the top, but nothing really to worry about. Down, but not out. With me, Ekta and Vinny.
Hi, good afternoon. So in terms of markets, also a quick check today, a bit of a muted day, right? 25,792 is what the Nifty is at, down 0.3%. But look at the broader end of the market. That's managing to hold on to some bit of a green, especially the Nifty small cap is managing to hold on to better gains. Mid cap also around 0.06% gains, but the small cap, that's doing very well. 0.5% of gain coming in for the Nifty small cap. Let's look at the advance decline ratio. More like an even Steven, slight bit more in the favor of declines. But yes, advance is also still there. We'll wait out for, where this is going to be headed. But today's surely interesting day, given that, we'll be seeing the result of this PR election as well, Ekta.
Well, guys, yes, absolutely. And, there's no problem really if you look at it on a week-to-date basis for the market. So on a week-to-date basis, the Nifty is up around 1.2%. We have the mid-cap index, which is up around 1.4% or 1.5%. So good going on a week-to-date basis, despite the fact that the markets are a bit skittish in today's trading session. Obviously, in wait-and-watch mode, we do have a lot to reckon with in terms of cues going forward, especially the Bihar elections, though there is an expectation that there could be an NDA win coming through. In fact, let's talk about the big story. The race for Bihar is on, with the NDA leading as of the latest trends. Parikshit is here with more details on that. Parikshit, over to you.
Well, there seems to be a clear wave in favor of the NDA. They seem to be beating anti-incumbency and winning with a record number. Yes, in 2010, they had won 206 seats in the Bihar Assembly. This time, they're winning at least 193 if we look at the early trends coming in from the ground. Can they cross the 206 number and win the Assembly with a record result? That remains to be seen. But yes, NDA's performance much better than last time around. If we look at the numbers of the NDA, let's just break it up for our viewers. Just take a look. BJP at 86, JDU at 76, LJP, Chirag Paswan's party at 22, Hums at 6, RLM at 6. All the alliance partners have gained. So somehow the BJP strategy has worked all across Bihar. Let me also get you certain factors that have really helped the NDA. Let's look at the woman factor in this election. Election after election, we're seeing how women are playing a very important role. And in Bihar, we had seen how just before the code of conduct came into place, the NDA had announced 10,000 rupees for every woman in Bihar. So 10,000 rupees was transferred under the Chief Minister's scheme to 21 lakh women beneficiaries in the state. You have 124 seats where women play a big role in this election. The NDA is winning 107 of them. India Alliance only at 14. Let's look at some of the other factors. And I want to speak about JDU here. 74-year-old Nitish Kumar. The opposition had raised questions about his mental health, about his ability to continue. Well, there are 24 seats where the JDU has a very strong hold in Bihar politics. And the JDU is winning 22 out of 23. So Nitish Kumar's party putting up a very strong performance. Clearly, Tigers in the hair, as the JDU says. BJP at 1 as far as the JDU stronghold is concerned. Let me also look at the BJP. Bihar is a state which has been consistently supporting Narendra Modi for the last 10 to 15 years. Out of those 23 seats where the BJP has a stronghold, the NDA is winning about 23 seats. So strong performance there by the JDU, especially 22 over here. Let's finally look at the rural vote. There are about 82% of the seats in Bihar can be comprised as rural seats, and the NDA doing very well here in about 23 seats. Let me just look up and bring up this overall map once again. Well, it's a lead for the NDA all through. 192 is where they stand right now. India Alliance at 47. And in the India Alliance, we're seeing how parties like the Congress are now just at about 5 seats. The RJD is at 34. So overall, it seems like a poor performance for the opposition. Tejasvi Yadav also trailing in the state. So clearly, there will be a lot of upsets for the RJD, for the Congress, for the opposition. A lot of thinking to do. But clearly, the NDA winning all across the state in Bihar.
Absolutely. So, yes, you have 191 seats right now for the NDA in terms of the Bihar elections. We'll watch out for the final results as well. As of now, RJD 48 plus seats, 4 for the others, and GSP is 0 as of now. But, yes, that's the update there coming in.
Yes, absolutely. Well, that's on the Bihar elections, but we also have the WPI data, which is flashing on your screens. It is a deflation of 1.2% in October versus 0.13% inflation on a month-on-month basis. So it has slipped into a deflation. That's primarily because of the food prices. So there was a decline which was expected in terms of the food prices, and that has come through. And that's the reason why you're seeing that October WPI to come through in terms of a deflation. We do have Aditi Nair who's joining in to give us her perspective on it. Aditi, what was your, what were you penciling in terms of WPI for the month of October? And what do you think is the key reason for this deflation?
Thank you, Ekta. We had actually penciled in a deflation of 1%, so it's come in a tad bit lower than that at minus 1.2%. And mainly, of course, like you said, the base effect for food inflation was particularly high, and that is something that is going to narrow now going forward. So this might be one of the lows, I think, over the next couple of quarters. I do expect that there is going to be a slight inching up overall in the trajectory of the WPI from here on out. But also, if we look at the non-food manufactured products and look at manufactured products in general, there also month-on-month the momentum has been very low this time, and that's partly because of the GST rate cuts, the rationalization basically seeping through. We had expected perhaps to see a larger impact on the CPI side than on the WPI side of the GST. But I guess, even as far as the inputs are concerned, possibly, a similar trend has gone through. And that's also helped to keep a lid on the overall, the core WPI inflation.
What is the trajectory that you are expecting in terms of food prices and WPI?
See, for the food prices, as such, this year the momentum remains very slow for a lot of food items, right? So that's a positive. We've got a good monsoon. We've got a good kickoff even to the Rabi sowing, for instance. So generally, the trends are very good this year. But in any case, we have a very high base that is there. Now, over the next few months, I think the benefit of that will start to go away. So for the CPI as well, for instance, we do expect that it may inch closer to 1% by the end of this quarter and move into the 3% handle in Q4 and then perhaps cross the 4% handle in Q1 of next year. So overall, now the trajectories from here on out look like they're going to be on an uptrend. How quickly the uptrend happens is something that we'll be waiting to see. The WPI tends to be a lot more impacted by commodities, including global commodities. So, of course, what happens in terms of global commodity prices will play a larger impact on the WPI than necessarily the food price trend. But overall, I would expect that the WPI is going to be very flattish in the current quarter. And average maybe 1% or thereabouts in Q4. So the average inflation for this year is going to be marginal at best.
All right. Aditi, what are you penciling in from the RBI come December now? We have this additional layer of information, though it's not the determining piece of information for the RBI. But nonetheless, after CPI and now with this deflation coming through for WPI, what are you expecting from the RBI in December, as well as the trajectory, say, for the next two meetings?
So possibly we'll get like a final rate cut from the RBI in its December meeting. I mean, the last set of inflation prints certainly supports that. We are fine-tuning our GDP forecast for Q2. It's looking like it's going to be, 7% or thereabouts. So that's a step down in terms of the pace of growth from Q1 to Q2, but it's still a very strong number. Now, with this, our projection of GDP growth being around 7% and the CPI and the WPI numbers that we have so far, I think it's a close call, but I would say that it's definitely tilted toward a 25 basis points rate cut. Now, if we end up getting a surprisingly strong GDP number, then I think we'll have to take a relook at whether that last rate cut will come through at this point in time. But yeah, as of now, that's our call and not expecting any further rate cuts after that. So I don't think we'll get any more rate easing from February onward. Let's see how long the pause cycle lasts then after that.
Okay, sure. Thank you so much for that, Aditi, and thank you so much for joining us on the show this afternoon as well. On that note, we're going to slip into a very short break. On the other side, we'll have the management of Rainwood Children's Medicare to talk to us about the Q2 numbers. So stay tuned in for that.
Welcome back. You're still tuned into Halftime Report on CNBC TV18. Well, let's get talking about one particular hospital company. Rainbow Children's Medicare reported what was a subdued set of Q2 numbers. Occupancy slipped sequentially, while the margins, however, sustained above 30%. The management has reiterated mid to high teens revenue growth guidance. To discuss this and more, we have Ramesh Kancharla, who's the chairman and the MD of the company, joining in. Mr. Kancharla, thank you very much, or rather Dr. Kancharla, thank you very much for joining in and speaking with us. If you could just, give us a sense in terms of the guidance from the previous quarter, or rather the trends from the previous quarter, where you had the occupancy dip, but you had your average revenue per occupied bed increase. Is that because there are lesser volume of lower ticket surgeries and occupancies taking place, and there's the case mix is possibly a little more superior? That's what sort of panned out this quarter as well?
Yeah, that's exactly happened. So when we have a seasonal business, usually seasonal business has a low ticket and also high volumes, which is why when you see the current quarter results, the volumes have come down, the occupancies have come down, and also the kind of a revenue has come down. But overall, your EBITDA is stayed fine, and also the RPOPs are pretty healthy because of the superior case mix.
So just give us a sense in terms of what we can expect when it comes to occupancies, as well as the average revenue per occupied growth. Per bed, do you expect this kind of metric to increase quarter by quarter?
I think they should increase the rather than ARPA, revenue per occupied bed, is always a little bit of a difficult for our children's hospital. We look at both ARPA as well as kind of a ARPP. So ARPP is probably a better metrics for children's hospital. Therefore, when you have a kind of a high quality business and a low ALRs, your RPOPs will obviously will go up significantly. When you have a lot of seasonal business, so your RPOPs will be more get moderated, and then your revenues will kick in better, and that translates to kind of a better EBITDA as well. The percentages may not may remain the same, but your overall throughput will be better because you are already kind of the rainbow is a very fixed model kind of things. Beyond a critical point, anything which is beyond 55% of occupancy, our EBITDA conversion is very significant.
Sure. Also, just in terms of overall, if I'm looking at newer operations, especially in the Northeast, how is that done for the company, and where do we see that headed here on in the second half of the year?
Yeah, it's a high quality business. What they have is they have a high obstetrics, and they have a IVF, and also the gynecology. They have a decent pediatrics. What we plan to do is we plan to add pediatric specialties and drive the intensive care services more aggressively. We already started doing transport services and those things, adding specialties. So make it a proper hub for the based in the Gauhati for the Northeast. We see a great opportunity in that territory because there's no other children's hospital delivering the high quality and also specialty care. So with a strong base of obstetrics and pediatrics, if we can build the specialties and more intensive care services, this would pan out to be a very good business for Rainbow.
Right. Dr. Kanchakla, let's cut down the base to the brass tacks. Over the next 6 quarters, 1.5 years, how do you expect your revenue to grow in terms of average revenue per occupied bed, in terms of the bed addition that you have, and in terms of increased occupancy? You've told us that after 50%, all of that starts to flow down to your margins as well. So when occupancy increases, the number of beds increase, and at the same time, RPOBs, if you could give us a sense on where that goes, we'll obviously be able to derive better what the EBITDA of the company looks like as well. So over the next 3 to 6 quarters, if you could give us a sense of a trend that we should track.
Okay. So in the 3 to 6 quarters, if you go back and see that in the last the 2 years, we have almost about 760 beds. So addition of this 40+% of the beds to the existing beds to us, the next 6 quarters, I think what we have, we do not have many hospitals to come in. The 2 more hospitals are going to come in, and Bangalore is going to commence in about next couple of months' time. Post that, we do not have a really serious any operations going to come on. It's going to be an operational excellence, and we would seriously look at kind of our revenue growth would be kind of about 20% for the every quarter. So at that kind of a revenue growth, if we can manage and maintain about 55% of occupancy at console level on a yearly basis, then that will give you a very good throughput. Giving a guidance on the RPOP is always going to be different because when you have a quality business and also seasonal businesses, also new hospitals, especially in the Tier 2 hospitals. Now we have 3 hospitals, one in Rajahmundry and Guwahati and also Warangal. So with those 3 hospitals coming in, and RPOP growth is difficult to predict, but overall our ARPP's average revenue per patient will continue to grow about 5 to 6%. That's what I can give you guidance.
Okay. All right. So we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that is Rainbow Medicare. Stock is down around 1.3% today and in fact has corrected around 20% from its 52-week high of over 1,700 odd rupees. So that stock in focus post its numbers. We'll take a short break, but we'll focus on the F&O setup at midday on the other side. Stay tuned.
Welcome back to Halftime Report on CNBC TV18. The Nifty is at about 25,800 levels now. In the last 15-20 minutes since we started the show, it's moved up a few 40 points or something odd that we could say coming in. But what's happening in the world of F&O? We have Mangalam at the F&O desk to take us through all of that. Mangalam, over to you.
Well, we're in a very tight band after having seen a near 600-point rally from the lows of the Nifty, close to 25,300 thereabouts. And that's exactly what is playing out. You know, there is consolidation. What's giving the market some supply is the Nifty IT index, which is down about 1%. And what's giving it some support is the fact that the Nifty bank isn't falling as much. In fact, it is at the flat line as we speak. But over the last, month or so, if you look at it, every time we've gone towards the 26,000 mark, the Nifty's faced some bit of supply. So it has to really break out of these levels. So that's something we will be monitoring. Today, the not so worrying part is that the market breadth is fairly even Stevens, even as the mid-cap index is mildly in the green. So that's good. The other part is that, the India VIX, that too is fairly contained. Post-election results and post this decline that we've seen from the highs, that's the India VIX is equally contained as well. The important level to track on the Nifty as well as the Nifty Bank are the 20-day moving averages. So long as the Nifty is holding that 25,750 mark and the Nifty Bank is holding a little around that 57,900 to 58,000 band, there is no real problems from a bull standpoint. However, there is not much upside. That's what the bears believe, given its trajectory of supply around 26,000, which is why there is some writing at the 25,900 call and the 26,000 call. Both of them come up for you. 25,900 call is a premium of 100 rupees. So 26,000, there is some supply. 26,000 call has a premium of 60 rupees, so around 2650 as well. So short point, 26,000 to 26,050 is a bit of a congestion zone for the market. But at lower levels, like you said, the Nifty's recovered from the lows. 25,800 put writers are fairly active. So 25,700 to 25,750, which includes the 20-day on the 20-day moving average on the Nifty, will be an important support zone to watch out for. One most interesting option that I saw today was the 27,000 call on the Nifty. Remember, it's way above what we are at right now, but for 1 rupee a pop, there is a lot of punt buying that is taking place at the 27,000 mark on the Nifty, so that's something we'll watch out for. A lot of individual stocks on our radar, long positions added understandably post good results on Muthoot Finance and Bharat Dynamics, but a lot of shorts continue to be added on Tata Steel. From the yesterday's high, the stock seen a correction of nearly 3-4% and currently seeing some short addition as well.
Okay, all right, Mangalam, thanks very much for that. Well, we take a short break, but on the other side, Manisha Gupta will join in and she's going to take us through a conversation with Chetan Mehta, CMD of Lakshmi Diamonds.
Welcome back, and joining us on the show now is Chetan Mehta. He's Chairman and Managing Director at Lakshmi Diamonds. Mr. Mehta, hi, thank you so much for joining in. First of all, your sense on gold prices, because we've seen very volatile moves coming in for this one. We are back around that $4,200 an ounce mark, with markets anticipating that the global central bank buying, the investment buying will just about continue supporting gold prices, not just this year, but in next year as well. Would you also have a sense on gold prices on what your targets are for the next year now?
Good morning, Manisha ji. First of all, I'd like to wish happy children's to each and everyone, all the children across the country. And yes, as I was always highly thinking that gold price will go up. And as you know, the gold prices are going up. I'm sure that coming days, and as you can see, the gold have given more from the Diwali at this time. The gold price have become jumped around 10 to 15%, and I'm seeing the very good number coming years. I think next to the coming 2-3 months, we can have a around 10-20% of more hike in the prices, Manisha ji.
How are you looking at the overall demand? Because this is 1 year, Mr. Mehta, that seems to be on record where we are looking at highest investment in gold and not so much in sense of jewelry. I mean, investment seems to have taken over in sense of jewelry. But as comes the wedding season, do you see that turning around with jewelry again taking precedence?
Manisha ji, I think the Diwali was very good, and we all know that we had a great sale in Diwalis. And after that, after the Diwali, the sales have been moderate for 10-15 days. And I think the coming season is coming up, and we will have a good sale. I always tell you that there is now it's a totally a seasonal business, that weddings are there around from the year. We have around 7 to 8 months wedding always, and 3 months we have a slack time for the market. But after the Diwali, 10-15 days was a little bit slow down because people were purchasing in a good amount of gold and they're investing into jewelry. Now, again, from the last week, the movement have started because the weddings are on the way. And I'm seeing a good demand of the jewelry buying. People have been, and the best demand, what I'm seeing is people are exchanging their old gold also in a big quantity, because people who had old jewelry in their bank and in their house, they're all exchanging and they're buying it and they're adding some gold. So I think this time I'm seeing at the Diwali also, people are exchanging their old gold into a big numbers and they're adding some gold and buying a big jewelry. So I see the demand is very good, as though always 15-20 days a slag of a market, but overall the market is very jump up because the wedding seasons are coming, and you have seen the returns have been so big and so huge, and majority people have invested in jewelry, because we were all always telling there is a bullion and coin will you can't enjoy by not wearing it, by you keeping in your banks and deposits. Now I think people are understanding that and they're buying a jewelry and they're enjoying this assets, and they're enjoying the appreciation of the market also, Manisha ji.
As you mentioned, that the exchange gold is coming in quite strongly. Last quarter, if I remember, the number was 40 to 50% of old gold coming in for new. Is that number still continuing for this quarter, this month?
No, last month we had, I think, huge exchange because of Diwali also, and people wanted to, they have planned their, they have to exchange. But this quarter, I think, coming quarter, maybe around 30-35% will be there. And the new purchase also will happen because people, I think, who have missed not purchased the jewelry in the Diwali time, people are now very much, missing those prices, and they are not getting back those prices. So I think people will invest more. So I think 20-25% of the old gold in this quarter, it should come. I don't see 50% coming, because it was a season for the festival, so people have had more exchanges. But now I think who had an exchange, they will again buy a new gold, because I think the what returns and investment it is giving, I think they will have a more around 20-25% of old gold will be exchanged. I think not 50%, Manisha.
What's your sense also on the diamond part of it? Because a lot of jewelry companies which have been coming out with their earnings tell us that the studded ratio continues to do quite well. When it comes to diamond, especially for the southern part of India, do you see that gaining precedence as well?
To be very frank, I can tell you very clear that before last in the Diwali quarter, or diamond studded gold jewelry did very, very, very great. And I have seen the people who were investing before into the gold jewelry also converting into the diamonds, because they feel diamonds are more precious and that is they're lasting forever. And when you take about the investment, it is not about the only investment. It is like they're wearing and enjoying also. So diamonds have been, I think now constantly, they have a good sale in the market. I don't see any dip in demands, as though I told you before also, okay, there is a dip in demand. The size of solitaires, which is 100% came down. The businesses have been come down of the solitaires. But when it comes to the small studded diamond jewelry demand, it is truly high and very in a big way it is going on. And what I've seen the last quarter sale, I think more better sale of diamond jewelry, lighter weight or mid weight or a high weight we will have in this quarter also, Manisha ji.
Okay, all right, Manisha, thanks very much. Always interesting to hear about the jewelry trends in the market. So the demand for solitaires has reduced, but for small studded diamonds, it still exists. Well, for the markets, we're down around 71 odd points for the Nifty. We have the Bank Nifty, which is trending lower by around 70 odd points at this point in time as well. Just watch out for the PSU banks, because that seems to be bucking the trend. The Nifty PSU Bank index itself is higher in today's trading session, and stocks such as Canara Bank, Bank of Maharashtra, all of these stocks are managing to hold up at this point in time. We'll take a short break, but up next, we'll connect with the industrial analyst at UBS. Stay tuned.
Welcome back to Halftime Report on CNBC-TV18. Nifty as of now 25,800, but you do have those numbers that are coming in from the Bihar election. NDA in terms of seats right now 197 is what it's standing at, RJD 41. So yes, that's what we'll be keeping an eye out on as well. But let's shift focus now, and we do have UBS's industrial analyst who's joining in. Amit is joining us in the studios today. Amit, good afternoon. Thank you so much for joining us today. Let's just start by talking about the CapEx story. Where do you see now that maybe the next leg of growth could come in? Would it be railways, defense, power generation side? Where is it that we're watching out for in terms of the next leg of growth?
Thanks for having me on the show. I think if you see in last specifically 1.5 year, the industrial capex momentum has broadly got some moderation. Where we see strong ordering momentum demand is on the power equipment value chain, be it on the cable side, on transformer switchgear side. A lot of this is global and local both. Where we see a lot of value is on the power equipment value chain. You have thermal, wind and solar. The incumbent leaders are winning a lot of orders. You see a clear ordering momentum, which is outperforming the industrial short cycle ordering momentum. That tells you a story. And on the defense side, we believe the tier 1 integrators, defense SOEs, are attracting a lot of orders. And we see a lot of tier 2, tier 3 private sector complementing them with the deliveries as you cut down the import, on the defense side. So these are two segments where, on the industrial subset, which are doing very, very well.
So where in the power, value chain do you find a lot of investable opportunity right now? Because specifically, there's so many parts to that value chain, and a lot of them have been discovered, spoken about, perhaps, fairly priced in as well. Where do you still see some opportunity?
I think you're right. I think, you have a lot of cable and wire and transformer and switchgear segments where we've seen a lot of earnings momentum in last few years, and to an extent, market recognizes a lot of them. But we think, specifically a couple of months ago when we published our, industrial initiations on some of the generation equipment companies, I think on the profitability side, you have a lot of thermal, wind and solar companies where, there is a lot of surprise waiting for you in the next 2-3 years on the profitability side. We have seen ordering which have been in momentum. We are due to see execution. It's a matter of time. You take a 2-3 year period and you will see a lot of on-ground execution. Power capacities are not planned for 1 or 2 years. They are planned for 20-30 years, right? So I think there a lot of catch-up will happen. We've not seen any significant addition on the thermal side in last 10-12 years, which I think is now going to catch up. And likewise, even on the wind side, so the entire renewable, integrated renewable power, thesis where we think a lot of execution will happen, and you go back and see a lot of incumbents who are consolidating the market share, and I think the profit pool is there to catch.
What would a range of stocks in that be, without any specific buy or sell recommendation? And I'm not saying that this is your, this is just for example, purely from an example standpoint. The bunch that you're talking about, you can take 5 or 6 names, and this is not a recommendation. I've given the disclosure on your behalf.
No, so I think, again, without going into names, I can say that if you look at the thermal power, right, in last 3 years, the kind of ordering, government has pushed, that tells you, a lot of work is happening on making sure that next 4-5 years, a lot of capacities which are needed, because you have to take care of, peak loads and thermal. There's no immediate answer to thermal, right? So you will see a lot of thermal incumbents who are gaining orders. They are bound to or due to execute projects. The supply chain is being focused upon. On the wind side, you see a lot of policy changes. So across power chain, government is, tweaking policy to make sure the local equipment companies get the competitive edge. We are not allowing imports on a case-to-case basis, if you see. So I think generally, which is where I think market needs to maybe focus on. The power of industrial subset, I think in the power generation equipment value chain, where a lot of things to catch up. And we are saying all the 3 sources.
How are you placed on defense?
Ekta, on defense, you have one challenge where, tier 2, tier 3 companies, might have a very elongated working capital. But where we see value is a lot of electronic warfare, electronic tier 1 radars. Post the recent conflict, you've seen a catch up or a fast tracking of decision making. right? So on the defense SOE side, you have...
Is that what the companies have been saying on their calls as well in terms of the commentary?
Yeah, we keep meeting companies, and I think even on the
UBS
on the preview note, we've indicated that a lot of companies are indicating that the decision making is getting faster. Government is prioritizing in the next 2-3 years what to order and award. So I think that is happening clearly, and you can very well see between the shipyards or the OEMs or the tier 1 electronic warfare companies, there's a very clear demarcation of next 1 to 2 year value.
Sure. Amit, what about the consumer durable side as well, right? Obviously, this time we have seen those issues coming in, RAC segment not doing well. Most of them have faced those issues. But specifically, if you're looking at consumer durables, in that, would it be more cable wires? Where would you, pick your bets?
See, very clearly, if you see last years of results, the B2B businesses are clearly outperforming. And again, I borrow those lines from the power equipment value chain, right? That is basically a lot of export opportunities for incumbent leaders. India has some large players with significant globally comparable capacities. So that is where they are benefiting on cable and wire. On the pure ECD consumer side, if you see, the profitability has been very, very weak, and that is indicative of demand. Maybe around, it will take some time, but it's very clearly B2C is lagging B2B there.
All right, we take that point short on time today, but not out of questions. Amit, thank you so much for joining in. It's peak earnings season, and just as you were speaking, the Marico numbers hit the bourses as well. It's a mild beat, but largely in line. The street was prepared for Marico's numbers already. The company had given their second quarter preview saying that the revenues are likely to grow in 30s, and that's exactly what has happened. 30% sort of revenue growth that has come by. The expectations were high 20s, around 26, 27%. So it appears that it's a bit of a beat, but it's something that the street was already prepared for, closer to 3,500 crores. So the company is posted against 3,350 crores. The good part is that the EBITDA is in line with expectations in terms of margin, 16.1%. The expectations were 16.3%. The EBITDA, reported absolute EBITDA is 560 crores, and that's gone all the way down to bottom line. So no surprises coming in from Marico, and the stock, which is just about 5% away from its 52-week high, continues to hold on around those levels as well. So no big change that we've seen in the stock price apart from a mild recovery from the lows. All the other details is something that we will be tracking as the company reports its press release and information to analysts. A volume growth of high single digits, around 6 to 7% is what the street is working with. Take a short break, come back, get you more of the markets and individual stocks.
Welcome back. Well, those are the trends, the latest trends which are flashing on your screen. But for the markets, currently we have the Nifty, which is down around 72 odd points, so just about lower by around 0.3%. Just about biding time, you'd have to say. A little bit of a wait and watch mood and a negative bias is what the market is trading with at this point in time. It is 72 points off the day's high, so let's see how the rest of the trading session goes. As of now, it's a wrap on Halftime Report. Business Lunch up next. Stay tuned.